Thank you, Mr. Chair. Chair Powell, always a pleasure to see you again. I want to start, and I don't expect you to comment on the policy here, but there's been a number of actions from the Trump administration of scrubbing or limiting data that the private sector has historically relied on to understand the direct and indirect impacts on the economy, public health data, information about breaking things down by gender, by race, that we need to understand granular shifts in the economy. I realize that you don't rely exclusively on government data, but has there been anything that has happened since the Trump White House was sworn in that has limited the Fed's access to information you need to fulfill your dual mandate?
Not that I'm aware of, no.
If there was, will you commit to sharing it with Congress so that we can fulfill our oversight responsibilities?
Sure.
Okay. When you were here in July, I'd asked you this question. I just want to confirm that you still feel the same way. Is it still your view that the Federal Reserve that climate change constitutes an emerging threat to U.S. financial stability?
I guess I would say it this way. I wouldn't say that climate change is currently a threat to U.S. financial stability.
An emerging threat.
I would say that it may emerge over time as such.
Okay, so $250 billion of losses in California. We've now got multiple states where the insurer of last resort is insolvent. Reporting today that California is having to bail it out. I know we have a difference of opinion on NGFS. I don't want to go into that. But is the Fed monitoring what is happening to our financial system as those insurers pull out, as insurance rates goes up, and people's both access to property insurance and the cost of insurance are going up? Are you monitoring what's happening systemically in our economy as a result of that?
Yes. The question, though, if the question is it a threat to the financial stability of the United States? That's really the question. And of course, we're following that very, very carefully.
Okay, so if you're monitoring it, where is the risk that was being backed by the insurance industry moving? Where in the economy does that risk now live?
So insurance companies, as you know, can cancel policies and not issue them, and they can leave states, and they're doing a lot of that. So where do those risks fall? They fall on homeowners and other beneficiaries, and they fall on state governments and to some extent the federal government. But they don't cause large financial institutions to fail.
Are you seeing shifts in mortgagers, mortgage servicers, their willingness to provide loans to homes as those insurance rates go up or disappear?
Implicitly, if you can't get insurance, then there won't be a mortgage. So
okay.
I can't point to episodes where that's happening, but that's certainly where this looks like it's headed.
Okay, because there has been reports going back several years now that the more prone your property is to flood risk, to fire risk, the more likely you are as a bank to offload that onto Fannie and Freddie, right? We've seen that data happening. So that then raises the question of, and this is maybe just purely academic and wonky, if you own a set of cash flows and you want to sell them to me, and we both have full information, I'm only going to buy them from you at an accretive value to you to the extent that I have a lower cost of money than you do, right? Just, sort of like Econ 101, right? So if we own Fannie and Freddie right now because they're in receivership and they are throwing off a string of cash flows to the Treasury, setting aside the nuances of how the CBO scores all these sorts of things, isn't the sale of Fannie and Freddie, on the assumption that the buyer and seller have perfect information, the same information on both sides of that transaction, if that's accretive to the American taxpayer, doesn't that implicitly assume that we have to sell to somebody with a lower cost of capital than we do?
That's I followed your logic there, yeah.
Okay, and that would only not be true to the extent, I suppose, either that the buyer violates every rule I had in my M&A career of paying for upside, as they say, or that the buyer lacked information that the seller had, right?
Fair.
Okay. So what I'd like to understand from you is, does that create a conflict of interest for the United States government? Because if we have if we have information about climate change being scrubbed from our data sets, and we have a White House that would like to sell Fannie and Freddie, are we committed to efficient markets that depend on accurate, transparent information, or are we committed to making a quick buck, in which case we might want people not to be uninformed? Is the Fed committed to transparent markets, I guess, is the first question, and then the second one, do you feel that conflict?
I think we're getting a little away from our mandate at the Fed. I mean, the idea of privatization is to get this off the balance sheet of the Fed and get private capital backing it up. And
Sure, and there would be good reasons for that, but if that is coming at the expense of value to the American taxpayer, we need to be transparent about that.
Right, but we have private sector banks. You know, we could make all credit could be made cheaper if offered by the central
Yield back.
government, right?
Gentleman yields back.